Hey everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the top 10 percentage gainers on our stock list today. So these are some of the big winners and a couple of stocks that are heating up. Okay, so we're going to go through this quickly because I'm going to try to fit quite a few stocks in this video. First up is ROKU. Okay, so congrats everyone that was following this play. This is the blue sky breakout. It's on a really nice 3-day run here. Now you have multiple gap ups. You have 1, 2, 3 gaps in a row. There are 2 unfilled gaps. The closest one is between these 2 candles. So a drop down to 29.50 would fill that second gap. There's also a gap between high of day on this candle and low of day on this candle. And so right now with this blue sky breakout, the key is to follow the intraday charts. As you can see here, there was a pullback from high of day. It hit that 48 zone and pulled back. If the candles do end up working their way at some point back into the bands, because notice how they keep forming above the upper Bollinger Band. You know, EMA 4 way down here at 33 is your first support level. Notice volume has been increasing. So what you have to do is check out the 15-minute chart. That's what we like to follow. And as you can see here on Friday, it formed the double top, and then it pulled back, and it actually closed below the middle Bollinger Band on Friday. So the chart was breaking down. It did hit that lower Bollinger Band, and it hit the breakout price. It had, this is the level that it broke out from earlier in the day, and so it held that level today, and there was a gap up open, and it continued running higher. And so once it hit the 47 high of day, there was a climax spike. If you look down here at 12:30, notice the largest volume bar of the day, accompanied with a pullback from high of day, forming a long upper wick on the candle, followed by a red candle and a large red volume bar. Those are all your climax spike signals. So, you know, we're going to see if this was just an intraday climax spike, or if it's going to break down now, or maybe take a pause or a breather. Right now, it's all coming down to this middle Bollinger Band, currently at 42.27. So if it can hold the dotted purple line, then it's still in play. And then what you want to see if you're a bull is the share price tomorrow trading above 45. That's the all-time high close. This is on a blue sky breakout, so the only thing that we can do, you know, there's no overhead resistance above 45, and then it's this 47, and then it's uncharted territory again. So if 42 fails to hold here, then the big support level to hold on a pullback is down here at 37.90, the 50 simple moving average. It needs to hold that level. If that level breaks, that would be a signal that the chart was you know, breaking down, cooling down, losing strength, and could possibly fill a gap below. Okay, let's look at HMNY. This is the move everybody's been looking for. Closed up 20%. Notice you have RSI now above 50, and you have FASTO above 50. They both have room to run until overbought levels. RSI needs to stay above 50. That would be a signal the chart's heating up again. Notice how when it had the big run, it was above 50. So it's been trying to break above that level. This is the second attempt. We'll see if it can hold. So anybody, you know, for people that have been following our HMNY charts, you know, we've been looking for a close above EMA's 4 and 8, and you know, that had happened on the 6th. But the levels failed to hold, and the share price pulled back. It dropped back below the 50-day simple moving average, currently at 11.20, and so that's the key level to stay above. That's the green line. It's currently hitting the middle Bollinger Band at 12.24. That's the dotted purple line. It closed just above it. So we want to see candles forming above the middle Bollinger Band and above the 50-day simple moving average. That's exactly what happened on this candle back here on the 15th of September. And when the candles got above the EMA's 4 and 8, that signaled the start of this bull run. And notice how you could have just loaded and kept riding as long as EMA 4 was holding. And then on this candle here on the 12th of October, there was a break below EMA 4 support, and then that signaled to exit. And so now, with the move back above EMA 4, if it can stay above that level, that's going to be the signal to ride. So you know, we're going to be looking now for the middle Bollinger Band to hold, possibly, and for a new uptrend to possibly begin. If it fails to break that level, that's going to signal more consolidation. If the 50-day simple moving average turns into resistance and it drops below, then you could see a drop down to the 100 simple moving average at 7. It is currently in a downtrend. It has to turn that middle Bollinger Band into support to get a new uptrend going. Notice there was a bull cross down here on the 813 and 5 MACD, and the 1226 and 9 is pinched. If you look at the HMNY monthly chart, okay, so you can see here that it made that big move, the run up to 35, and it pulled back, forming that long nasty wick off of the 2005 resistance zone, that 30 resistance zone that we had talked about in the past. And so now what's happening is hitting this high close resistance for 2017. If it can break above this big white candle here and close above it for the month, that's going to signal it's ready to break out higher. You would have to go all the way back here into 2006 to find the next resistance zones. It's trying to break the 2007 resistance. It's above all other trading. So yeah, this is still a strong chart. It just has to break through this current level. Notice there's big volume behind the move. Okay, let's look at EKSO. Okay, congrats everyone. You know, closed up 32%, and it was up much higher in the trading day. So congrats to everyone that got in on this on Friday. You know, I know we had people in the chat that were talking about this on Friday, and so it had closed above the 100-day simple moving average at 150. That was signaling more upside. It also closed above the 50-day simple moving average down here at 119. That's the green line, and it had a big gap up open. It ran above the 200-day simple moving average, currently at 215, and was above it temporarily, but it pulled back. It formed this long upper wick that shows profit taking and possibly dilution, and then it closed below the red line there. So that's a red flag. It needs to close above that 200-day simple moving average to head higher. If that level turns into resistance, it could pull back and fill this gap. Notice there's a gap between high of day on this candle and low of day on this candle. So a drop down to EMA4 at 156, that would fill the gap. So it did form this high wave, you know, spinning top, indecision candle, almost doji. And so many times when that forms, the share price will pull back. Okay, let's look at ARGS. It's closed up 24% today. Congrats, everyone. You know, it formed the black candle, so it closed below the open. The open was up here, and then it closed down here at 22. So even though it was up on the day, the bears were actually in control for most all of the day. You know, there was a small upper wick, and so the close below the 100-day simple moving average is a red flag. That's at 23. That's the gold line. It needs to be above 23 to head higher. If 23 is resistance, there's a gap below that could fill. You could see the green lines here. A drop down to 18, which is where the 50-day simple moving average currently is, that would fill the gap. I'm showing you this chart because if you look back here, the previous big green volume spikes, notice this big one here and a big one here, one in July, one in April. Notice they both were accompanied by black candles. And then once again, you have the same setup, big green candle, black candle. So those candles were followed by red candles and consolidation. So that could happen, and it could pull back to fill that gap. It has to hold that middle Bollinger Band down there at 16 in order to keep this new uptrend going. If it drops back below 16, it'll be a risk to hold. Notice how it's been pulling back for quite a long time. If it can stay above the 100-day simple moving average in 23, that's going to signal more upside potential. And then you could see a run up. This was a big support zone. So look at that as the first resistance level. And then you do have the 200-day simple moving average way up here at 73. If you look at the 15-minute chart for ARGS, you can see the you know, the first candle of the day. When you see a black candle form like this on the 15-minute chart, that's a red flag. You know, there were alerts put out by our chat members that this was forming, and then, you know, that was a good call. Look how it pulled back. It failed to ever get, you know, never got back above that level. You know, that turned out to be the high close of the day, and so it became this, because this is the close right here on this black candle. This is the open, this is the close, and notice that no other candle closed above that level. And then once the share price broke the middle Bollinger Band down here at 3 o'clock, that was a red flag that the chart was really breaking down. It actually started breaking it at 245, and then it really broke below at 3. And so now the big levels, this 50 simple moving average at 205, it has to hold that level. If it could bounce off that level and then get back above this, notice the 23 levels back on deck again, that's the middle Bollinger Band, then it could get this uptrend going. If it drops below the 20 level, below this 57 moving average, that could signal possible gap fill, and then you could see a drop down here to 18. Notice you have the 100 simple moving average at 18.8. This is the bottom of the gap down here, this green line. And then you have the 200 and 300 simple moving averages way down here in the 16s. So it's really important that ARGS holds 20 for the bulls and breaks above 23. Okay, look at APTO. Okay, this is on breakout mode. So congrats everyone. This is a really nice breakout on on a big volume spike. If you look down here at the volume bars, it was the largest volume day since back here in June. The share price broke out well above the previous resistance levels. Notice how on Friday there was a clue that this could happen when the close was just above high close resistance. This was the high close resistance level to break in August. Closed just above that on Friday, and then boom, look at the big breakout today. And so when a stock is breaking out on the daily chart, what you need to do is look at the weekly chart to find resistance. And as you can see, this is a really nice uptrend. It broke above the middle Bollinger Band down here in May and June, turned it into support, got above the 50-week simple moving average, turned it into support, it's held, and then now it's breaking above the 100-week moving average. That's the gold line currently at 181. So you want to see a weekly close above that level. This week's candle will not set until the closing bell on Friday. So between today's Monday, so between now and Friday, a lot can change. It could run much higher. It could actually pull back and close below that gold line. But the key is where it closes for the week. And if it closes above that level and it turns into support, that's going to be a signal that this uptrend is intact and that it could continue. Ultimately the target, if the 100 holds, would be up here at the 200 and 300 week moving averages in the 370 zone. So yeah, it's got a good uptrend going. It's not going straight up, but it's got it's forming candles above the middle Bollinger Band, writing EMA's 4 and 8 support higher. So that that's a solid uptrend on the weekly chart. Okay, so take a look at WPCS. Okay, so this has made it back on our radar. Okay, it's got RSI now above 50 for the first time since it broke below back here. And so if you look at what happened the last time, so notice how back here the RSI was below 50, it tried to get above, and then once it finally broke above 50, that signaled the start of this whole run. Notice it got above 50 right here, and then this big run happened. Okay, and so it dropped below right here. Okay, and that's when the middle Bollinger Band broke. And notice how that signaled the start of this whole downtrend. Okay, so now check it out. Now it's back above the middle Bollinger Band, and then now you have RSI back above 50. So that's a really clear signal that this could be the start of a new run. Now it has to stay above 50 on RSI. If it drops below 50, that's going to be your signal that it's cooling down and not quite ready. And then it also needs to stay above the middle Bollinger Band on the daily chart here to be considered still in play and to have the uptrend intact. And that's at 157. That's this dotted purple line. So if it stays above 157, that could signal the start of a new uptrend. Notice how it's trading above all the moving averages here. You have the 300, 200, 100, EMA's 4, 8, 13, the 50-day simple moving average and the 20-day simple moving average, which is the middle Bollinger Band. So it's trading above all the moving averages. They've all converged in the same zone. So if it can turn these levels into support, that could be a big breakout. That's what happened back here in September, in the September run. So we'll see if it can get a nice run going here. There was a volume spike. That's exactly what you want to see on a breakout above resistance. And then notice there was a PSAR bull flip. So when the share price came up and it hit the PSAR level, okay, it came down here. So the PSAR, when the candles are riding higher, the green dots are below the candles, and when the chart starts breaking down, the candles catch up with the dots. The dots catch up with the candles, and when the candle hits the dot level right here on this candle, oh geez, this candle right here, then the dots will flip above the candles, so you can see up here. So they went from down here. This candle hit, and so they flipped way up here. So ever since October 17th, the dots have been above the candles, and then today they finally flip below. SAR stands for stop and reverse. So that indicator is signaling the possible, that the possible downtrend is stopping and a possible new uptrend is beginning. So we'll have to see if it can follow through. There's a bullish crossover on the 8, 13, and 5 MACD. Notice it, it started crossing over here. It was pinched, and then you've got what we call pinched MACD here on the 12, 26, and 9. The MACD line is getting ready to cross over the signal line. If it does cross over, that'll be signaling more upside potential. Okay, so let's take a look at JAGX. Okay, so this stock is heating up. Okay, so if you've been following our charts, we put out alerts, and we do a lot of plays like this where, you know, we have the runners, you know, we'll show you the runners, we'll show you the breakout plays, and then we'll show you charts that are setting up, that are just getting ready, where it's day one, or where we see that it's a bounce play and it's getting ready to find support. So those sometimes those are the biggest winners because you can get your best entry point. And so here is an example with JAGX. We put out alerts, you know, a few days in a row. I believe the first one was over here on the 8th, you know, when it was breaking above the middle Bollinger Band. And then notice how it took, like all last week, it failed to close above, but each day it was trying to close above this dotted purple line, which is the middle Bollinger Band at 18. And then finally today that happened. It actually gapped up above that level. There's no unfilled gap because of the wicks on the chart. And then it closed strong. You know, it closed actually above the upper Bollinger Band. Notice how tight the Bollinger Bands were. This was our signal that the move was imminent. Notice that when there was the big drop, the big red candle, the Bollinger Bands got so wide they went off the chart. So you can see here that they're completely off the chart, the lower Bollinger Band and the upper Bollinger Band. But then once this consolidation pattern happened, the Bollinger Bands got super tight. And when they get tight like that, that signals that a change in trend is coming soon. And so you either look for a break below support. If it had dropped below the middle Bollinger Band and started shooting downward, that would signal the chart was going to break down to the downside. Or what's happening now, it's breaking out to the upside. Notice how the upper Bollinger Band's hooking up and the white candle's busting through. That's what you want to see. It has to stay above 18 to remain in play. The big level to break now is October 2nd close right here at 24. If it can get above 24, then the next target is the 50-day simple moving average at 28. Okay, let's look at ENSV. Okay, so this stock has a good daily chart going. And as you can see, it's hitting near you know, 52-week highs here. So yeah, it had this high back here in November of last year, and so it's testing that level. That's 79 cents. And so basically what happened is you have a jar fill. So you've got you know, you could start back here, but we'll just say this when it hit this this high right here at 80 cents, you know, the share price came all the way down in April, made a bottom, and then it's coming all the way back up. Okay, so it's filling the jar. You know, this is a big jar being filled. Drops down here to the lows where it found support. You've got a double bottom, and now it's working its way back up. And now the top of the lid is right here where this high closes from back here in May of 2016, just above 80 cents. So if it can break above that, and then you've got the high from, you know, in the last 52 weeks is right here at 80 cents. So this 80, you know, 85 resistance zone is the big level to break. If you can see it bust through that, that's going to signal that it wants to head higher. And then you've got dollar land with the 200 and 300 week moving averages on deck. The blue line's the 300 week moving average, and then the red line's the 200 week moving average. So this is a strong uptrend. You know, the candles broke above the middle Bollinger Band down here in July, and they've been riding EMAs 4 and 8 support ever since. Notice even on the pullback, it still held the line, which is EMA 8. So this is as strong as it gets. You know, for those people that look for swing trade charts and they just want to like ride a stock for a little while and they don't want to have to worry about it every day. You know, if you get into a chart like this where you know it's riding EMAs 4 and 8 support higher on the weekly chart, you can sleep a lot better at night. As long as support's holding, you can continue riding. And it takes a little bit for the weekly chart to break down. So it's, you know, it just gives people that have a 9 to 5 a little more time frame to be able to you know, trade without having to be glued to their screen 24 hours a day. Okay, let's look at TEAR. Okay, this is the bounce play that we had alerted on Friday, and you know, it formed the bullish reversal pattern. And so today that pattern was confirmed. So congrats everybody. You know, it did close up 15% on light volume, only 190,000 shares traded. So this is a very thinly traded stock. If it can stay above EMA 4 at 83, then the next target's going to be EMA 8 here at 95, and then right here at this like 101 level, the bottom of the gap. There's a gap here. So yeah, so the upside here is 95 to $1. If it drops back below EMA 4 at 83, it will no longer be in play. Okay, let's look at CEI. Okay, so this stock is had a nice move today. It bounced. It had the big move last week on the 8th. So notice how it ran all the way up to the 200-day simple moving average. That's the red line currently at 33, and it pulled back. It had the high close here at about 27.7. It's close to 28 cents, and then it pulled back, and it ended up breaking the 100-day simple moving average at 21. That's the key level to hold. That's the gold line, and so the CEI closed above that level today. So if it can stay above 21, that will signal more upside potential. You don't have to get above the open here at 25, but the next big target is going to be this closing price here on the 8th. And then if you can get above the closing price on the 8th, we'll be shooting for the 200-day simple moving average at 33. If it drops back below 21 and the 100-day simple moving average turns into resistance, you could see a drop down to 17 to test that 50-day simple moving average in the middle Bollinger Band. So that's the downside risk. It really needs to stay above 21. But if it does, it's got some good upside potential, so keep an eye on it. And then let's look at AVIR. Okay, so this stock is another dead cat bounce play. Notice how it pulled back. It had the nasty big red volume bar, the big drop below EMA 4. Notice there's multiple candles in a row that closed below this pink line. And then finally today, it closed above that level. Notice the upper wicks on some candles last week tried to break EMA 4. It was trading above that level intraday, but the share price pulled back. But today it finally closed above, and then it closed right at EMA 8. That's the line at 57. If it can get above 57, it might work its way back up here to test this resistance zone. It's got a lot of work to do. There's EMA 13, the 100, 200, 50, and 20-day simple moving averages. So it's a heck of a lot of resistance to get through here. But if you see it get above 67, then it could really get moving again. Yeah, this is just a dead cat bounce play. We'll see if it can follow through. And then the last one to look at here in this video is MOSY. It did close down 7% today, but they had good earnings were released after hours and had a good reaction to that. And the after hours price is up here around 86 right now, 86, 88. It was hitting those levels. And so the big level tomorrow is going to be this green line. That's the 50-day simple moving average at 837. If it can stay above 84, that will signal more upside. And then what you want to see is a run up here to the 100-day simple moving average at 105. It will need to break that to get higher. If it drops back below, you can see there's a gap. Okay, so there is a long upper wick on today's candle. There's an upper wick and it's pushing close to 80 cents here. So if the share price drops down to 80, it could fill the gap. It would be better if there was no unfilled gap and then it closed above the 50-day simple moving average. Then there would be nothing for the market makers to pull the share price back to. Similar to back here, notice how there was the gap up open. It ran up and then it hit the 100-day simple moving average and they pulled back. This could be the exact same scenario. You could get a gap up open here, run up to the 100, and then run back, fill the gap. And so that's really, maybe traders want to see that happen, but for bulls, they really don't want to see that type of pattern repeat. But keep that in mind that that MOSY has a history of filling gaps after a gap up open, and especially if it hits a key resistance level like the 100 or 50-day simple moving averages and fails to break. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.